Ryan had a good salary, $91,000 a year. He was not in debt, not struggling, not the kind of person who needed a financial intervention, but on a Sunday afternoon in March, he sat down with a legal pad and a cup of coffee and did something he had never done in 7 years of full-time work. He calculated what he actually earned, not his salary. What he actually earned after taxes, after the cost of getting to work, after the things he bought, because the job depleted him, after the time the job took that his contract never mentioned. 40 minutes later, he had a number. His real hourly wage was $9.84. He had been telling himself for 7 years that he was building something. That Sunday, he found out what he had actually been building, and it was mostly someone else's margin. This video is about the calculation he ran, what it revealed, and what he changed. The salary figure you negotiated is not a measure of what you earn. It is a measure of what your employer pays. Those two things sound identical. They are not. What your employer pays is the gross number, annual, pre-tax, everything. The most flattering true version of your compensation, what you actually earn, is different. It is the money available to your real life after all employment-related costs are removed, divided by the time your job actually claims from your existence. Most people spend their entire careers optimizing the gross number. They negotiate raises, chase titles, compare salaries. And while they do all of that, the number that actually determines their financial reality, what they keep divided by what they give, goes completely uncalculated. Think about how a business would handle this. No company looks at revenue and calls it profit. Every dollar of revenue gets accounted for against the cost that produced it. The number that matters is margin. Your salary is your revenue. Your real wage is your margin. And most people have never run the calculation that tells them what that margin actually is. Ryan earns $91,000 gross. After federal income tax and FICA contributions, that is Social Security and Medicare, totaling 7.65% on the employee side, his take-home pay is approximately $68,000. That is the number that hits his bank account. Most people stop here. Ryan used to stop here. The math is not done. Category 1. Getting there. Ryan drives 34 miles round trip to his office in Austin, 5 days a week. Using the IRS standard mileage rate for 2024, 67 cents per mile. His commute costs $5,695 per year. Add $85 monthly for office parking, which comes to $1,020 more. Total, $6,715 annually. Just to show up. Category 2. Looking the part. He works in tech. Casual by industry standards. But professional environments have unwritten appearance norms. He tracked his actual clothing and grooming purchases attributable to work over the previous year. The total came to $1,400. Category 3. The depletion economy. Ryan leaves at 7:45 in the morning and gets home around 6:30 in the evening. By the time he transitions out of work mode, it is past 7:30 at night. He has roughly 2 hours of real personal time before sleep. In that depleted window, he makes expensive decisions. He orders food delivery 4 nights a week. The premium over cooking at home, factoring delivery fees, markup, and tip, runs about $18 per order. 4 nights, 50 weeks, that comes to $3,600 annually in spending that exists because work used up his capacity to feed himself. He also identified approximately $1,800 in online purchases made in the 9 to 11 in the evening window after high-pressure days. These were items he had not planned to buy and felt indifferent to within 2 weeks. Total for this category: $5,400. Category 4. Recovery. He takes 12 vacation days annually. He estimates 4 of those days exist primarily to recover from work rather than for genuine leisure. His work attributable vacation cost comes to approximately $800. He also assigns 60% of his $1,800 annual therapy spend to job-related stress, which comes to $1,080. Total for this category: $1,880. Gross salary: $91,000. After tax and FICA, $68,000. Minus commuting, $6,715. Minus professional appearance, $1,400. Minus depletion economy, $5,400. Minus recovery costs, $1,880. Real net income, $52,605 per year. That is 57.8 cents of every gross dollar. The other 42.2 cents evaporates before he makes a single free choice. A wage is money divided by time. We just recalculated the money. Now, look, honestly, at the time, Ryan's contract says 40 hours per week. Here is what his employment actually claims: morning preparation, showering, dressing to office standard, eating before a 7:45 departure. That is 45 minutes daily. Commute, both directions, 90 minutes daily. Captive lunch, technically unpaid, but he eats within 10 minutes of the office and returns promptly. He is not free during this time. That is 30 minutes daily. Post-work decompression. Occupational psychology research documents this consistently. Knowledge workers need 30 to 60 minutes to psychologically disengage after a demanding workday. Ryan averages 40 minutes. After-hours digital engagement. The American Psychological Association's annual Work and Well-Being Survey finds that a large majority of employed adults check work messages outside official hours. Ryan averages about 20 minutes on weekdays and 45 minutes on Sundays. Contracted hours, 40.0. Morning preparation, 5 days, 3 hours and 45 minutes. Commute, 5 days, 7 hours and 30 minutes. Captive lunch, 5 days, 2 hours and 30 minutes. Decompression, 5 days, 3 hours and 18 minutes. Digital extension, 5 days plus Sunday, 2 hours and 24 minutes. Total, approximately 59.5 hours per week. Annually, that is 3,090 hours. Real net income, $52,605. Real annual hours, 3,090. Real hourly wage, $17.02. Ryan's $91,000 salary. The number on his offer letter. His tax return. The number he told people at dinner. Translated to $17.02 per hour of his actual life. He then ran it for his first 3 years. When his salary was lower and his commute longer, real hourly wage for those years. Approximately $8 to $10, those were the years he was most proud of. The years he thought he was building something, nothing that happened to Ryan was the result of malice. There is no villain. There is a structure, and it produces the same outcome reliably. 4 mechanisms drive it. The gross anchor. Job offers are presented at their maximum. $91,000 annually lands differently in the brain than $52,605 after employment costs. The first number becomes the reference point, the anchor, around which Ryan built his apartment, his car, and his lifestyle expectations. Anchoring is a documented cognitive bias in behavioral economics. The salary system exploits it systematically. The lifestyle ratchet. Every raise produced new baseline spending. Better apartment. Newer car. More frequent dining out. Each upgrade was individually rational. Collectively, they created a financial floor that required exactly his current income to maintain. He could not afford a pay cut. He could not afford 6 months without a paycheck. He had, through a sequence of reasonable-seeming decisions, made himself dependent. The promotion paradox. Ryan was offered a senior role last year, a $14,000 raise. He ran the numbers. The senior role added monthly client travel, extended his average workday by 45 minutes, and increased his stress enough to meaningfully raise his decompression spending, net real income gain after accounting for all additional employment costs and taxes, roughly $6,100 more per year, with proportionally more hours. His real hourly wage would have improved by less than $2. He declined. The exhaustion loop. The job depletes him. Depletion produces spending on convenience and recovery. That spending increases his financial dependence on the job. The dependence makes him more tolerant of depletion. The loop is self-reinforcing and self-concealing. The exhaustion that drives it is the same exhaustion that makes it hard to see. He did not quit. He did not move. He did not build a side hustle or adopt a radical lifestyle. He made 3 structural changes, each targeted at a specific inefficiency he had identified in his calculation. Adjustment 1. Remote work negotiation. Ryan prepared a business case, not a casual ask, but a structured proposal with his delivery metrics and a reference to research on productivity in hybrid roles. He requested 3 remote days per week as a 6-month trial. His manager approved it. The impact was significant. Commuting costs dropped 60%, from $6,715 to approximately $2,690, saving $4,025 annually. On remote days, he recovered approximately 90 minutes of commute time and 30 minutes of preparation time. With more energy in the evenings, his food delivery frequency on remote days fell by half. Estimated total real income improvement from one negotiation, $5,300 per year. His employer paid him nothing additional. Adjustment 2. The 48-hour cart rule. Ryan traced his $1,800 in stress purchases to a specific behavioral pattern. They were initiated after 9 in the evening, following high-pressure workdays, while in a cognitively depleted state. He implemented a simple rule. Any non-essential item added to a cart after 8 in the evening cannot be purchased for 48 hours. Not forbidden, just deferred. The result was clear. The majority of items he added under this rule were abandoned before the 48-hour window closed. He was not suppressing genuine preferences. He was preventing his exhaustion from spending money. His rest itself would not have spent. Estimated annual savings: $900 to $1,100. Adjustment 3. Price translation. After calculating his real hourly wage, Ryan began converting significant purchases into real hours before completing them. The method is simple. Divide the price by your real hourly wage. The result tells you how many hours of your actual working life, including all shadow time. The purchase represents a $340 item at $17 per hour real wage is 20 hours of real working life. That is 2.5 full working days, including commute and decompression. Sometimes that framing makes the purchase clearly worth it. Often it makes it clearly not. The question changes from, "Can I afford this?" to, "Is this worth 20 Tuesdays?" Those are different questions with different answers. 14 months later. Real net income: $59,800, up from $52,605. Real annual hours: 2,790, down from 3,090. Real hourly wage: $21.43, up from $17.02. A 26% improvement. His employer's contribution to that improvement was a 3% merit raise. The remaining 23 percentage points came from Ryan through precision. Ryan is not a personal finance extremist. He still orders dinner sometimes. He takes vacations. His gym membership is underused. Nothing about his life looks dramatically different from the outside. What changed is the instrument he uses to navigate it. Before March, he had a vague sense that he earned a solid salary and spent it reasonably. He could not have told you his real hourly wage. He could not have told you whether his last promotion offer would have made him better or worse off. He could not have told you what fraction of every dollar he was actually keeping. After the calculation, he could answer all of those questions precisely. And precision produces different decisions than vagueness, not more restrictive decisions, but more intentional ones. We are handed one metric when we enter the labor market: the gross salary number. Annual. Pre-tax. Headline. We are taught to maximize it, compare it, and treat it as the primary indicator of financial health. But the gross number does not measure what it appears to measure. It tells you what your employer pays. It tells you nothing about what you keep, how much time you surrender, or whether the exchange is producing a return commensurate with what you are giving. The metric that would tell you those things, and your real hourly wage, is not handed to you by anyone. You have to choose to calculate it. Most people never do. Not because it is hard, because they are too tired, too busy, or too afraid of what they might find. Ryan found that he was not failing. He was just navigating without the right map. The map exists. The Sunday exists. What you find when you use it is entirely yours. Here is how to do what Ryan did. No purchase required. One Sunday afternoon. A piece of paper. Step 1. Your official rate. Take your gross annual salary and divide it by 52, then divide again by 40. Write it at the top. That is the number you were sold. Step 2. Your after-tax base. Apply your actual, effective federal tax rate from last year's return. Use your effective rate, not your marginal bracket. Then, add FICA, which is 7.65%. Subtract state income tax, if applicable. This is your real take-home. Step 3. Commute cost. If you drive, use the IRS standard mileage rate, published annually at irs.gov, and multiply it by your round-trip miles. Then, by your working days, add parking costs. If you take transit, use your annual fare. If you work fully remote, write 0. Step 4. Professional appearance. Review your actual purchases from the last 12 months. Identify the portion that would not exist if you work casually from home. That difference is your professional appearance cost. Step 5. Depletion economy. Look at your food delivery history. Estimate the premium over home cooking. Then, review your online purchases for items bought in depleted, late evening states that you did not need and feel neutral about. Now, add any other identifiable depletion-driven spending. Step 6. Real hours. Start with your contracted hours. Add your daily commute time both ways. Your morning preparation, which is typically 30 minutes, your post-work decompression time, and any regular after-hours work communication. Multiply your weekly total by 50. Step 7. Your real hourly wage. Divide your adjusted net income by your real annual hours. Write that number somewhere you will see it. Not as punishment, but as information. Because once you have it, every significant purchase becomes translatable into real hours. Every career decision becomes analyzable. Every negotiation becomes grounded in something real. Ryan improved his real hourly wage by 26% in 14 months. No new job. No new city. Just the number. And the decisions that follow when you know it. The calculation is free. The Sunday is yours.